Hello and welcome to another Deeper Insights video with members of Westpac Economics and Strategy discussing the key macro events of the day. I'm here today with Head of FX Strategy Richard Franulovich to discuss Joe Biden's first 100 days in office. Welcome,
Hello,
Rich.
Sean.
Well, it's been a very eventful 100 days, that's for sure. And understandably, President Biden had a lot on his plate in terms of the vaccine rollout, the state of the pandemic as he came to office, but also great plans to support the economy. So what would you say are the key events of that first 100 days from an economic point of view?
Sure, Sean. Well, look, the first 100 days of any presidency, there's always a desire to act with haste, act on the goodwill that's in place. And Biden's had both a pandemic and a stalled economy to contend with. He's pursued an incredibly ambitious agenda, both in terms of policies that have been successfully passed through Congress and those that are on the table yet to be passed. Some eye-watering numbers between the
Yes.
American Rescue Plan, infrastructure, and the American Families Plan. We're talking about 3 policy proposals here amounting to about $6 trillion. But I would also add, I think it's fair to say we should call this, rightly, the Biden boom. Yep. As President-elect early January, expectations for the US economy were that it would grow about 4% this year in 2021. Fast forward now to where we are in late April, we're talking about an economy that's probably going to be growing around 6.5% for the year, if not higher.
And that's the Fed's view.
Exactly.
That's not a radical forecast.
It's
the
exactly
Fed's baseline. It's
a baseline central case scenario, and a lot of that has to do with policies that Biden has put in place. Yep. First of all, the economy was already rebounding and reopening, so there was an element of a recovery that was already playing out. But an important confidence builder for US recovery was an incredibly aggressive vaccine rollout program. More than 230 million vaccine doses have now been delivered. Look, it's hard to say how it would have played out under a Trump presidency, but Biden nonetheless brought to bear an incredibly aggressive amount of federal resources to that rollout. And on the American Rescue Plan, their opening bid was for a $1.9 trillion support package. Mm-hmm. Most sensible commentators thought that package would be whittled back to something more sensible. Yes. But in the end, it was passed with unanimous Democratic partisan support. Yep. And as a result of those 2 important developments on the vaccine and policy support front, we're now talking about an economy that's going to go gangbusters this year. So rightly, we should be calling this the Biden boom. Yep. Now, the easy yards, cash handouts, extended unemployment support, aid for states.
And this has all been implemented.
And no tax hikes.
Yeah.
That's the easy part of the Biden agenda. And now we're approaching the more challenging part of his agenda, where it's going to be tougher to pass some of these policy proposals. What are your thoughts on infrastructure and the Families Plan?
Yeah, so that's where we, as you say, that this came through. He needed every Democrat, and again, we remember when he won the election. The Democrats did not have control of the Senate. Now they do, but only if every Democrat votes. It's 50-50, so all Democrats plus the casting vote from Vice President Harris. So that's how they got through this. As you say, it is enormous. It is 9% of GDP. This is massive. Yeah. It's come through. The economic data is showing the first quarter GDP very strong. You can see it, and that's going to continue to flow through. But this next stage, maybe not as big an impact on the economy, but ultimately, as you say, the 1.9 seemed to be an opening gambit when we first heard about it, ended up being enacted in full. Now, this next stage, so we've got 2 more packages. One is very much focused on infrastructure, and America really needs support on infrastructure, that's for sure. So there is potential for a bipartisan package, but the scale of what Biden's proposed is seen as far too much from the Republican side. Yep. And crucially, it seems to be too much even for the Democrats, for the moderate Democrats, let's say. And you only need 1 or 2, and that's it.
Yeah,
because
the policies
the Republicans are sounding as though they're not going to vote for this full-size package. So this is where we do have probably an opening gambit that's most likely going to be whittled down. Mm-hmm. And it's also infrastructure takes a very long time. Doesn't matter where you are in the world. It's a multi-year thing. So the impact, it's not going to be anywhere near as spectacular as what we've seen from this the rescue package with the cash handout. So far more longer term. The newest one, really only the past few days we've heard about this, but the American Families Plan, so that's focused on education, childcare, and so on. Mm-hmm. That one, we need to see more details, but again, it's very ambitious in scale, and it certainly does. It will challenge the support of Democrats.
How's he looking to implement this in terms of funding these programs? The initial aid plan was a 1.9 pure stimulus to the economy. Yeah. But on this hand, we're talking about tax hikes, right?
Yeah, so that's really very important too. Ways of getting through. People love spending, not so. But once you start to increase taxes on anybody, there's going to be a lot of pushback. So that does include some of the moderate Democrats. So we've got a proposed increase in corporate tax rates. Mm-hmm. So remember, President Trump cut the corporate tax rate from 35% to 21%. The Biden plan to help fund infrastructure would raise it to 28%. Mm-hmm. So there's a bit of discussion of some of the centrist Democrats willing to accept an increase in corporate tax rate, but maybe more like 25. So this is some of the negotiation that's underway. And some of the potentially increased capital gains tax for some of the other spending there. So dividend loopholes, increased tax paid by multinationals, that sort of thing. So some of it's probably got bipartisan support. I think multinationals keep dodging tax by keeping their profits offshore. I think there's potentially some support for compromise there, but it's very open at this point.
Yep.
And so, Rich, turning to international policy in the first 100 days, China no longer has to worry quite so much about tweets about tariffs and so on in the middle of the night. But essentially, what has really changed so far from the Biden administration?
Yeah, as you say, Sean, the relationship has shifted back to more traditional diplomatic channels, which is for many people considered a good thing. But it's no less contentious or combative. In fact, I suspect as President-elect Biden was coming into the White House, China may have expected a slightly cooler temperature and perhaps even a rollback of tariffs. They have not been forthcoming. It's pretty clear that the new administration is adopting a lot of the policy positions of the Trump administration. That is to say, confrontational around IP theft, technology theft and the like. But the bottom, and there has not been a rollback of tariffs. That's probably been the biggest disappointment. But the bottom line here is that the Biden administration's fiscal stimulus plans are still building confidence, supporting global growth. So still very good news for Chinese growth in that regard. Which begs a question, where does this leave markets and currencies of interest to us, such as the Aussie dollar?
That's right, yeah. So bring it back home, and essentially what's good for China in terms of their industrial sector is almost always good for Australia. So Australia obviously has real challenges on the export side as far as international services are concerned. Mm-hmm. But what we really have seen over the past few months, and it is linked back to the US to a significant degree, is just that upswing in growth, even plans for infrastructure. They're getting priced into commodity markets. So it's really raised the price of not just iron ore, copper, aluminium, a lot of metals, some of the metals linked to green energy and so on, electric vehicles, what have you. There's been a very bullish period for commodity prices, and so that supports the Aussie dollar. We've been running very large trade surpluses, so it has been very positive from that point of view. So a coordinated global upswing is overwhelmingly positive for the Aussie, that's for sure. Yep. Okay, well, thanks very much, Rich. It's been a very eventful first 100 days. I'm sure it'll be a very eventful next 100 days from the Biden administration.
Sure will.
So thanks for watching, and we'll see you next time.